In this video, I'm going to be talking about earned income tax credit under the Biden American Rescue Package. I'm also going to spend about a minute or two talking about the SNAP benefits as well. For the earned income credit, I'm going to talk about how it's changing in 2021 and what you should be doing in terms of ensuring that you are taking advantage of the benefits. You want to listen up because there are quite a bit of change, and even if you were not eligible for the earned income credit in the past, based on some of these changes, you could be eligible. If you're new to my channel, I am Tanya Taylor of Grow Your Wealth TV. I teach individuals how to fix their finances and cover all areas such as budgeting, credit, debt, and investing so that you can grow your wealth and retire worry-free. And as a CPA, I love to talk taxes as well. If you have not already done so, please be sure to subscribe. And if you find this content useful, go ahead and share it with your friend. And don't forget to hit the notification bell so that you can be alerted when I post new videos. Now, the Earned Income Tax Credit is a refundable credit for lower income individuals and families, and it can reduce your taxable income. Now, the way a refundable credit works is that if you qualify and the credit is larger than the tax you owe, you will still receive a refund for the difference. So for example, if you owe $1,000 in taxes and you qualify for a $2,500 refundable credit, then you would still get back $1,500 refund, as opposed to a non-refundable credit where you would not actually receive any refund at all. So you want to make sure that you understand that distinction. And I'm just going to do a quick background on how the EITC, short for Earned Income Tax Credit, works. So over the years, there have been bipartisan support to change the Earned Income Tax Credit. And the reason for that is because it favors families of children. They actually receive about 97% of the credit. If you have no children, you could only qualify if you were between the ages of 25 and 64. And generally, families with more children will receive the larger credit. For example, in 2020, families with 3 children could receive as much as $6,600, while the maximum an individual would receive is about $538. So there was a big disparity, and also the age limit was pretty restricting as well. So what was happening was that about 5 million people who were eligible for this credit did not claim this credit. Therefore, the IRS had about $7 billion in unclaimed benefit annually. It's not too late. You can go back and check your return for the past 3 years and see if you did qualify for the credit, and go ahead and amend your return or file a return if you did not qualify for filing so that you can get that credit. Now, all of this statistics was included in a report by the Treasury Inspector General for Tax Administration. So this is real data that's coming out of the IRS. Some of the reasons why individuals did not file their tax return was because their income was below the filing threshold. And because their income was below the threshold, they did not realize that this credit, which, as I mentioned before, is a refundable credit, would mean that they can have money in their pocket. Share this with your friends who you know who do not make a lot of money, who could have potentially qualified for this credit, and see if maybe they can get a refund there as well. Let's talk about what's changing under this new rule. So before, I had mentioned that you would only get about $538 if you are a single individual and you claim this credit. Now that amount could be as high as $1,500. That's almost 3 times what you would have been eligible for. So definitely a big plus. And also previously, if you made less than $16,000, that's how you would qualify. And that income threshold is now increased to $21,000. Another really big plus, because if you were on that border where you made over $16,000, then now you have the opportunity to get that extra refund in your pocket. Also, previously, if you had investment income, which was greater than $3,650, you would not have qualified for this credit. That amount is now raised to $10,000. And a lot of new investors entered the market in 2020. So it's possible that you did not make a lot of money, but you were trying your hand at investing and you made some income. So now if it's under that $10,000, you can still qualify. One of the allowances also made in this package is that you can now use your 2019 income to figure out the amount of credit that you will be entitled to. So one of the other changes that's also a big deal is that the age range to qualify for earned income tax credit is now reduced to 19, where the maximum age has been removed. And the one thing that you should know about that is that it excludes full-time students who are between the ages of 19 and 23, and it also excludes former foster care and homeless youths age 18. One of the things that I see a lot, and because my husband is a tax preparer, I hear him having these conversations a lot. If you claim a child as a dependent, and that child earned income, you want to make sure that you are planning with that child, whether or not you're going to claim them or if they should go out and file their taxes on their own, especially now that the threshold for earned income tax credit has been reduced to 19, because a lot of these teenagers or young people just like to go out and do their taxes without really planning with their parents and consulting. And it can make a big difference how much you take home in terms of refund, depending on how you filed. So you want to make sure that both you and your child or children are talking to the tax preparer to plan what's the best way to file your taxes. Just thought I would throw that tip out there, because also when I used to do taxes, it was one of the same thing where I would have to have those conversations as well. What's another great thing that's happening under this change? Well, in the past, only one parent was allowed to claim the earned income tax credit. And now the rule has been amended where the second parent, if you're separated, can also claim the credit. I would highly, highly encourage you that even if you file your taxes by yourself generally, that you might just want to consult with a tax preparer just to make sure that all of the different credits that are being offered as a result of this package, that you are getting it and you are preparing your tax return the right way, so that you don't have to go and amend your tax return in the future in order to have to fix some of these issues that may be fixable or may be able to plan ahead now. Already filed your tax return, and as a result of this rule, you now qualify for the earned income tax credit. All you need to do is to file your Form 1040X, and your tax preparer knows exactly what to do to make those changes. The IRS can decide to revoke your EITC if they see that you're trying to flout the rules. Make sure that you're working with your tax accountant and make sure that you're following all the rules, because if they decide to revoke that, it could take a couple of years before you can claim the EITC again. I hope that you found this information helpful. This is the comprehensive list of changes that I have seen in the rescue package. If I missed anything, please include it in the comments below, because I'm sure it would be helpful for others who are watching this video. Now, I want to switch gears and talk real quick about the SNAP program, because food insecurity has increased almost threefold since the pandemic, with between 6 and 10 million households not having enough to eat in the past week. In terms of SNAP, families can expect to see that 15% increase that was included in the December bill extended from June to September. So they've given an additional 3-month window, and hopefully, again, once they get to September, they will reevaluate and determine if that needs to be extended further. They've also made a number of provisions in the act to update the Women, Infant, and Children program to provide more fruits and vegetables to participants, and also to update some systems as well, just to make sure that the programs are operating more effectively. Yeah, so that's what's happening with the Earned Income Tax Credit and the SNAP program. I welcome your comments. If you found this helpful, let me know. And also check out the other videos where I talk about things like the child tax credit, as well as unemployment benefits. I also talk about just a broad overview of the bill itself. Now, if you're someone who is ready to take charge of your finances in a meaningful way, I have an excellent program for you. In this program, we are going to meet you exactly where you are. So we start out by teaching you the basics. You will learn how to create a budget, repair your credit, and manage your debt. Then you will learn how to invest and grow. And investing could mean starting a business, building business credit, how to invest in the stock market, index fund, mutual fund, and exchange traded fund, as well as real estate type assets. And then you will also learn how to protect your wealth through insurance, tax planning, as well as estate planning. If you are ready to take charge of your finances, my contact information is in the description box below. Reach out to me. I would love to get to know you more and help you to create a path to map out your journey to financial freedom.